Hi, this is Larry Lane for InvestorZoo.com, and today we're going to talk about gold and if it's right for your portfolio. Before we get started, I am not a registered investment advisor, so do not make any financial decisions. You get off of this blog. This is strictly for information purposes only. So, that being said, you've heard the doom and gloom coming out of our economy, as well as the problems with Greece. And you're thinking that gold might be a good hedge just in case the world goes to hell in a handbasket. Here are some things to consider before purchasing gold. Um, about 30 years ago in 1980, gold was currently trading at 524 an ounce. It's currently up at around 1200 and change. So we're talking about double and a half as far as return rates go over the 30 years. The S&P, on the other hand, was trading at about 107.94 in 1980. That is currently the S&P is currently trading anywhere between 1,000 and 1,100, depending upon when you're listening to this. So that's a tenfold increase. Um, So if you still think gold is a good investment for you, here are some ways that you can own gold. You can purchase gold by directly buying coins. You don't need to buy them through a broker or any of the advertisements that you hear over the radio. They're just going to mark the price up. You can buy gold by going directly to the U.S. Mint. So that URL is usmint.gov. If you opt to go the gold coin route or go to purchase gold directly, the physical hard gold, you're going to need a place to store it. Most people like to go the safety deposit box route. If you're with a bank, and like most banks, they're going to charge you $15 to $20 a month or more just to store it. So that's going to put you back $240 a year on your investment. You can purchase gold through stocks. There are mining companies that you can go with. These fall into the small, medium, and large cap range, value and growth as well. There are some companies that have mining operations here in the U.S. and some that specifically only mine overseas. So before investing in a gold company, mining company, there are currency fluctuations to deal with as well as political questions. If your company is mining in a hostile environment politically and there's a coup, they could lose all of their mining rights overnight and their stakes. So it's something that could affect your investment as well. There are gold mutual funds and gold ETFs if you wanted to spread your risk around a little bit. Uh, Gold mutual funds can have anywhere between 20 and several hundred different gold-oriented metals companies. ETFs are very similar to mutual funds. They again may have 20 to several hundred different mining companies, and their ETFs generally track an index. In fact, if you wanted to buy a corresponding index to gold, you can just buy the symbol GLD. That would get you the closest match to gold, where gold prices where they will fluctuate on a daily basis. Um, so depending upon your outlook on the economy, gold may or may not make sense in your portfolio. General rule of thumb that I like to go by is to put no more than 5 to 10% of your overall portfolio into commodities. But again, that's just me. Please consult your financial provider before making any type of investments. If you'd like to read additional blogs on investing in personal finance, you can go to InvestorZoo.com. You can also post one of your own and give back to our community. This is Larry Lane for InvestorZoo.com. Thanks and have a great day.